In this video, I'm going to talk about 10 personal finance rules that they don't teach in schools or colleges. And if you went to school or if you went to college, chances are they never taught you about money management, they never taught you about investing, and they never taught you guys about credit. Now, with that said, you probably just took all the required courses or everything, or the bare minimum that you were required to do to graduate. Now, if I remember correctly, some of these courses that I had to do in college, I simply just did them because I wanted the credits to graduate. And for example, calculus, which has some good information, was just something that I never used after college, and I don't ever think I'll ever be using that information in the real world. So instead, learning about managing your credit, which is very important, probably the most important personal finance topic, and also money management would have been better courses to learn in college because those courses can actually help you along in your journey in life. So looking back now, I feel disappointed in the school system because, for example, learning about credit, I think, should be included at least in colleges because if you want to purchase a car, you need credit. If you want to purchase a house, you need credit. If you want to do anything, you need credit. And this is why so many people have terrible credit scores because they were never taught how to use, build, or manage their credit, and they have to just figure it out on their own. Now, if you went to school or college, maybe even high school, comment below and let me know some of the courses that you took that you're now realizing that you don't need and you probably won't ever use the information in your life. Comment and let me know which courses you just learned because it was required and you won't ever use that information. Now, I'm going to give you guys 10 personal finance rules that you most likely never learned in school, and these are things that everyone needs to know. Also, before I list all 10 personal finance rules, welcome back to the channel if you're already a subscriber. And if you're new here and seeing me for the first time, my name is Ian, and on this channel I talk about ways to make money, ways to save money, ways to invest your money, credit cards, banking apps, and everything to do with personal finance. So if you like these videos, be sure to give this video a thumbs up. I'll really appreciate it. It's 100% free to give this video a thumbs up, and also consider subscribing to the channel and turning on all the notifications, and that way you'll get the updates every day when I post a new video. So let's get right to the 10 personal finance rules now. And the first personal finance rule that you need to know is that going to college is not required to make it in life anymore. There are millions of people who are not going to college and they're getting jobs. They're getting high-paying jobs. They're doing just fine. You have people who are becoming entrepreneurs and they're doing it without getting into any college debt. And so the idea of having to go to college and spending $50,000 to $100,000 and then having to work for 10, 15, 20 years to pay off that debt is no longer required, and you don't have to do this anymore. Now, even if you want to go to college, there are still programs and options that will cost you a lot less than the traditional college cost, where you can spend maybe $5, $10, $15, or even $20,000, and you can get some degree and you can get a job and you can pay that debt off in 3 to 4 years, and you can still be very successful in life and in your career. Now, in school, they will tell you that college is very important, and they will try to sell you the idea that you must go to college. If you don't go to college, then you're going to become a bum, you're going to become homeless, and that is far from the truth. If you're not yet in college and you're thinking about it, be sure to look at all your options and see all the different things that you can get involved in or do for work that won't get you into a lot of debt. Because if you go around right now and you find people who have degrees, who have this student loan debt, most of them regret going to college and getting into that debt because most times or oftentimes they don't even get the job that they expected to get after college. Instead, they get some job that pays them minimum wage or a little over minimum wage, and they regret every moment of going into debt for college. Now, the next personal finance rule that you need to know is how much money you need to put down to purchase a house. Now, mainly people think that you need 20% down to purchase a home, and people start saving towards getting that 20% down to purchase their home. However, this may actually not be practical and probably not even realistic in most cases. Now, the price of real estate has continued to rise year after year. So whatever you could purchase 20 years ago for $150,000, you're probably going to need $250,000 to purchase that same real estate property right now. This means that if you were saving or you're trying to save 20% or a 20% down payment to purchase a home, you might be saving and trying to catch a moving target, because what's 20% right now for the house that you want to purchase by the time you save that amount of money, it won't be 20% of the home or that same home that you want to purchase anymore. This is why you should take advantage of first-time homebuyer programs or improve your credit so that you can take advantage of a regular conventional mortgage with only 3% down. Now, this isn't to say that saving a 20% down payment for your home isn't a good idea, because it will save you a lot of money in interest payments and also private mortgage insurance. However, if you see yourself saving that 20% for your home in around 3 years, then I think that's practical and you should go for it. But if you do the math and you realize that after 3 or 4 or 5 years, you're still not going to have that 20% to put down on a house, then I would instead work on getting an FHA loan or a conventional mortgage with a very low down payment, because you may save for 4, 5, 6, 7, 8 years, and by the time you save 20% of the money that you think you need, the cost of real estate may have gone up and you may still have to keep saving more money to get to that 20%. Now, the next personal finance rule is that rule where they tell you to save at least 10 to 15% of your income. Now, this may actually be taught in some schools, or they mention that you should always save 10 to 15% of your income, but this is just not practical in the real world. 10% of your income is just not practical. If you save 10% of your income and you work for 30 years, you'll most likely only be able to survive for another 10 years, or that money that you saved for retirement won't last you much longer. The only way that you can save 10 to 15% of your income throughout your working years and retire comfortably and not run out of money is if you have a very high income right now, where you're making 6 figures and upwards per year, and you save 10% of that, which is also not a lot of money, because that's going to be $10,000 to $20,000 per year in that case. Now, maybe in retirement, you can scale back on your lifestyle and you can survive for another 20 to 30 years. But if you're the average person and you're making between $30,000 to $60,000 or even $70,000 per year, and you only save 10% of your income every year for 30 years, then in retirement, you'll definitely run out of money, because that will not be enough. So if you're the average person making $60,000 or less per year, then you're going to have to increase the amount you save each year from 10% to at least 30%. And even if you're saving 30% of your earnings, you need to invest it in something that yields you returns, because that will also not be enough by just merely saving that money. This is the reason why I talk about investing in the stock market so much on this channel, and also why I talk a lot about side gigs and side hustles and ways to make extra money. Because if you're making, let's say, $50,000 per year and you're saving 20% of your earnings, which is good, if you also have a side hustle that makes you only $1,000 per month and you get to save that money and invest that money, that will have a huge impact on the amount of wealth that you can build over the next 20 to 30 years, which prevents you from running out of money and becoming homeless in retirement. So the 10% rule no longer works, and you definitely need to save more money and also invest your money. Now, the next rule is the emergency fund. I'm quite sure that you would never hear about this in school, no matter what school you went to. Now, surveys done have shown that almost 50% of the population do not have $400 to $1,000 in a bank account or cash just laying around where they can use it to take care of any small minor emergencies. So right now, the average person, whenever they have a water leak at home, or they have termites, if something breaks on their car, if their refrigerator stops working, if the washing machine stops working, if the heat or cooling in their house stops working, they'll have to put the costs for repairs or a replacement on a credit card or on a small personal loan. Now, this means that they'll always be in debt. This is where the emergency fund comes in. The emergency fund is just a small amount of money that you have saved up, and you never use this money and you never touch this money, and it's always there for any minor unexpected emergencies that pop up. Now, the recommended amount to start an emergency fund with is $1,000, because that should be enough to take care of any unexpected emergencies that pop up. So if you get home one day and your refrigerator isn't working, then $1,000 should be enough to get it repaired or possibly replaced if you can find a bargain. Now, $1,000 is just the starting point here. Your emergency fund ideally should have at least 3 months of expenses, or the amount that's equal to 3 months of expenses. And this can also go up to 6 months, depending on how good your job is or how secure you think your income is. So for example, if you know that it costs you $2,000 to survive every single month, which will take care of your bills and your costs to live, then you need to save at least, at the very minimum, $6,000. This is equal to 3 months of expenses, and you have that money in a high yield savings account that you never use, and that way if you lose your job or something breaks on your car, the heat, the cooling system in your home stops working, you don't have to take your credit card and go into debt or to take a personal loan to take care of those expenses. You can take care of these emergencies, and then you can take the time to save money and add and replenish that emergency fund. Now, the next personal finance tip or rule that is never taught in schools is budgeting. And this is very important, or a very important one, because a lot of people struggle because they simply cannot differentiate wants from needs. So people will overspend on wants when they actually can't even afford the things that they're purchasing. Now, I know no one likes creating budgets because this is very boring. However, if you think about it, all you really need to do is to look at your spending. Look at your bills, take all your bills and calculate the total cost of all the bills per month, add groceries and anything else that you need to survive on, and those are going to be your needs. Starbucks, vending machine purchases, upgrading your cell phone, buying the latest tech, and all that stuff can go into needs. Now, some people can actually differentiate their wants from their needs, but they have a very difficult time in separating their finances or managing multiple accounts for each spending category. So a very simple way to solve this problem is to sign up for the SOFI money account. Link down below in the description, and you'll also get some free cash just for signing up with that account and using it. But that account has a feature called vaults, and the vault feature allows you to create multiple sub-accounts of your account, and you can give them any name. So for example, you can create a sub-account for wants. You can create a sub-account for saving for vacations. You could create a sub-account for savings, and this way you set this up so each time you get paid, the correct amount of money goes to each sub-account, and that way you never overspend in any category and then run out of money in another category. You can then spend the money from your vacation account for only vacations. This way your finances are separated and you never overspend, because once the money in your wants account is done, for example, you know that you have to wait until the next month or whenever you get paid again before you can actually spend money on things you want. So if you're struggling with a budget and separating your finances, then I highly recommend that you download the SOFI Money app and sign up. Link down below in the description. Now, the next personal finance rule that you need to take advantage of is the power of compounding, and this works really well when you're younger. Now, this is why I think this should be taught in at least high school. So a very good example of this is to think about a high-yield savings account. If you put $100 in a high-yield savings account, that gives you only 3% in interest, and you start this account at, let's say, age 20, and you add $100 to this account every single month, which is only $25 per week, then at the age of 65, around the age when you would retire, which is 45 years of saving this money, you'll now have a total balance of $117,000. And in this example, what you contributed to this is only $54,000, and you're getting over $60,000 in interest payments from compounding. However, in this example, if you were to do the very same thing, where you started doing this when you were 40 years old, you'd only have 20 years before retirement to take advantage of compounding. So in this example, you would only make around $9,000 from interest and compounding. So there's a big difference when you start saving earlier or you start investing earlier than when you start investing or saving later on. And so this is why compounding is very important, and you should learn about it, and you should also take advantage of this when you're younger. And this is why I think they should definitely teach this in schools, because when you learn about this at age 35 or 40, it's still good, but you've missed out on a lot of money. If you had known this at the age of 18, then you could have taken control or taken advantage of the power of compounding. Now, the next personal finance tip or rule that they should teach in schools is about credit and your credit score. Now, most people will leave high school or college and get their first credit card, and they'll go shopping and max out their credit cards because they don't know how to properly manage credit, and so they'll max the card out, they'll purchase all the stuff that they want, and then they make the monthly payments or the minimum monthly payments. However, after a few years, they'll realize that they'll keep making the monthly payments and the credit card debt is not going away, and this is because of the very high interest on credit card debt, and you're paying down the minimum payments every month, but actually, usually you're just paying the interest and the balance is just never going anywhere, and this is how people get trapped in credit card debt. What makes this even worse is that 4 or 5 years down the line, you will want to purchase a home or something else, and you'll realize that because you have this large amount of credit card debt, you have a high utilization ratio, your credit score just won't go up, and so you'll either get denied for loans, or if you get approved for any loans, you'll get them on less favorable terms with high interest rates, and then you'll have to make larger down payments. So this one is probably the most important on this list because you need credit to do just about anything. If you want to get a cell phone right now, most carriers will want you to pull your credit because they want to know that you're actually going to pay your cell phone bills on time and not just take the service, use it, and not pay your bills. So not learning about credit is just really shocking because it's just one of those things that you need to use when you become an adult. If you don't know much about credit right now, then you should learn. I have a lot of videos explaining credit cards and how to build your credit on this channel, so be sure to check those videos out if you don't know much about credit and you want to learn. Another personal finance rule is insurance. So most people don't know if they need insurance or not, and if you have people that depend on you, maybe you have a spouse or maybe you have kids, then you definitely need to have some form of life insurance policy. So in the event that you either can't work anymore or you're just not around anymore to take care of those kids or your dependents, the policy will take care of them. Now, if you're single and you don't have any dependents, then you don't necessarily need to have life insurance because you have no dependents. In that case, I personally think that it's just wasting money, and some people probably don't know this and they have a life insurance policy when they really don't need it because it's not going to benefit them in any way. Another important personal finance rule, and depending on what school or program you're enrolled in college, you may have learned a little about this, and this is about taxes. However, I think that this needs to be fully explained to everyone in school, and this is important because some people just don't understand how much trouble they'll get into if they simply underreport how much money they make every single year, or they don't pay their taxes on time. And if you're doing a side gig or a side hustle or you start your business, you'll have to get this done on your own. Now in 2021, you don't necessarily have to be a pro and go learn all about taxes. You can actually download or use some online program like TurboTax, for example. You can just put all the information in, it will do your taxes for you, or you can hire the services of a CPA and they'll take care of it for you. At a cost, of course. But there are some people out there who just didn't know that they had to do their taxes and that they had to do them on time, and that if they didn't do their taxes, they were going to be fined and possibly even taken to court and thrown into jail. So always do your taxes, and if you don't know about taxes and you're doing some business, then you want to do your research or hire some professional services because this is actually very, very important. Now, another personal finance rule is to always carry a health insurance policy. And this one is important because although you may not get sick all the time or you don't really get sick, all it takes is just one single injury. All you need to do is to break a leg or break an arm once, and the medical bills can get into the thousands very quickly. And if you're unlucky and you need to make follow-up visits to the doctor's office, then those bills are going to add up very quickly, and it's going to be in the thousands, and it's going to cost you a lot of money. It's a very small amount, and in my opinion, it's well worth it. So if you have a job and your employer offers a health insurance policy or plan and they offer to pay some of the cost, then you should definitely take advantage of that. And if you're self-employed, you also want to shop around and get yourself some coverage as well, because you don't want to break a leg and then have to call your friends or family to loan you some money to take care of your medical bills because you don't want to go into debt for this. So these are 10 personal finance rules that should be taught in schools. Guys, comment below and let me know which one of these personal finance rules you learned in school, if you learned any of these in school, because I'm curious to know if some school somewhere in the world actually teaches any of this stuff. So I hope this video was helpful and you liked the content. If so, be sure to give the video a thumbs up. I'll appreciate it. Also, subscribe to the channel and also check the links down below for free and helpful stuff, which includes that link to SOFI Money, which is the account that I mentioned earlier on in this video, where you can create multiple sub-accounts off your hybrid account, and that way you can use it to manage your money properly. As always, thanks for watching. All the best with managing your money, and I'll see you guys tomorrow in the next one.